As I was saying, the South African Reserve Bank has raised the interest rates 6 times since late 2021. The Monetary Policy Committee today expected to announce yet another interest rate hike. Let's talk about the situation now with Chifipa Mhango, the Chief Economist at Consultancy Group. A very good afternoon to you, sir. Welcome to Daytime Update. Are you optimistic at all that we'll be spared the worst of the interest rate hike cycle today?
Yes, good afternoon, Tendiki, and good afternoon to your viewers. Well, indeed, we're in for tough times. I think the expectation of the market is that we're expecting anything above 75%, 75 basis points in terms of increase for the interest rates announcement for today.
Why 75 basis points?
Well, it has to be in line with international trends. If you look at some of our major economies where we actually got an element of destination of capital flight, there's element of protection of the value of the currency, which is the rand, against these major trading economies such as the USA as well as the UK. So if you look at the emerging picture which has been transpiring in these economies, we've seen an aggressive, or I can say even say a fast-paced approach towards the interest rate hike. In fact, as the last cycle of increase, both in the US as well as in the UK market, it was actually 75 basis points, which was this month. And I think there is expectations of the US actually moving to a 50 basis points increase in December. So to keep the line in terms of those markets, obviously anything above 75 basis points is what we're expecting in the market. In fact, it would be a mild approach from the South African Reserve Bank if we get a 75 basis point, because it's leaning towards a 100 basis points in terms of increase for today.
Which would mean what then for consumers, especially heading into the end of the year and into a new year?
Well, it's a disruption in terms of the holiday patterns. Remember, we're going to the festive season, which is a normal time when people want to enjoy themselves. The first time in 3 years, we've had a no lockdown in terms of the holiday season. But then when that affects your pocket in terms of your installments such as home loans as well as car repayments, credit cards, all of that will have a major impact in terms of the consumer's pockets. So it might actually be disruptive in terms of the plans that people have towards the festive season in terms of the consumer expenditure.
But when you look at the broader economy and what it needs, at the moment the MPC has spoken a lot about its concerns to do with the inflation rate. But if people, for instance, going into the end of the year decide to, say, shop less than usual, give up extravagances, perhaps in some instances, such as cars and new homes, which direction would that swing the economy broadly?
Well, I think from some sectors of the economy, such as, for example, the vehicle manufacturing, such as the new vehicle manufacturers, it relies heavily in terms of the credit environment. You also got some of retail shops which also rely heavily on the credit environment. So it will actually disrupt patterns of demand in those segments, especially in the vehicle industry. But also, I think it was also an opportunity for consumers to reflect back in terms of what are the priority areas in their lives. The past 3 years we had a lower rate in terms of interest rates in the economy. I think that would be a time where most of the consumers were actually now focusing on paying off their debts. Mm-hmm. So currently, I think the space in terms of that ability has actually been reduced because one, we've got a high inflation base in the economy, which is also eating in terms of the daily consumption patterns from the consumers. So it's really quite an environment of a balancing act which is required by consumers in terms of setting up priorities that expenditure going forward.
We've been in this hike cycle now for 12 months, a year since, and the next one will be in the new year. Are we going to see a further extension of interest rate increases, or will 2023 bring better fortunes, especially when you consider that the broader global picture remains largely unchanged, if not worse?
Well, I think really going forward, it will all depend around what is the inflation environment, both domestically and also what's happening globally. But I think just to give you a simple example, it's really depressing growth in the global markets. For example, the UK economy is now sitting at around 11% in terms of inflation. You're looking at the US economy, which is sitting around 7.7% in terms of inflation rate. And those rates are well above the target range of those economies. And I think from the South African perspective, we're also above the target range of between 3 and 6%. I mean, we're currently sitting around 7.6%. So the environment really going forward is that the challenges with regard to the supply and demand patterns globally in terms of the issues of the war in Ukraine, the energy factors coming into play in terms of cost, it's really putting a negative picture if you look at it from the consumer point of view, that really going forward we might see a similar trend in terms of interest rates going up, which is going to really hit heavily on the consumers. So expect a tough year ahead in terms of 2023 with regard to expenditure patterns from the consumers.
Chifipa Mhango, Chief Economist at Consultancy. Thank you.